Justin,
Yeah,
quick one. I think you're right. They may need to raise, but the raises have been very small. They've been like every
yeah.
6 months, have been 1 million or so, and they're always close, sort of after results and close to the price at the time. So,
Yeah,
and they've
yeah.
also got something like 6 million warrants at 22p out and about as well. So it might not be as dilutive as we might fear. And I think that the traction, like I said in the note, they're doing 6,000 installs over the next 5 weeks for
Yeah.
Southern Waters or something. I think it's a
What's
quite significant one.
Yeah, in my
Clearly, it's
mind,
been
right?
hit.
Yeah, in my mind, I'm just thinking, what is the valuation right now? Because I thought it was like 6 times sales originally. I thought that's not cheap. And you've always got to look at pretty much. Let me just find it. Oh, hang on. Let me just find there. Ondo. So 22 million market cap. And that is still literally. I don't even my thing at the way. I can't get my head at the way. My head's stuck in the way there. Um, So 22 million market cap. That's still 2 times 2026 sales. That's it's pretty much what 3.5 times 2025 sales.
Well, yeah,
And so
I think
and then
again.
they're not even profitable. I just think they're overvalued.
Well, I
There's
think
a
if
lot of hype around them.
you've got to look at this through a different lens, because yes, there's your revenue, 11 million, but what's recurring there? They're at 1.7 million recurring revenue now. I'm going for a basis of times 10 on recurring revenue, right? So if they're at 1.7 long-term contracts, right, for whatever, so 17 million there. If they're going to get up to my calculation was something around, I want to get them to sort of 10 million ARR, your PE valuations don't really come into it, because
Yeah, I
the
remember
revenue
they've
is
got
going to be
they've also
significant.
got the convertibles, what, 6 million of convertibles. So their
Warrants, yeah,
EV is what, 28, 29 million.
and they've got
I know.
debt.
Listen, I may be wrong. Just so my proposition is I've been strong-headed about this, and I've got to be, because I'm thinking you can get growth and value, okay, and that would help the company a lot, and healthy companies as well. This is a company that may have some growth, in fact, decent growth, but it's a lot of it's sort of, I think, priced in. The rise has happened. I mean, I nearly pulled the trigger on this on the pull down here, and I didn't bother. I've missed it, but it shot up there. So there's a lot of hype in it. But I think that was the hype. I think it may have to go sideways. If it breaks out here, maybe look at that sort of maybe that 30 pence level could go, but it's not based on good valuation there. I mean, I'd worry about every time financials come out. I'd worry a little bit because I'm thinking, ooh, the loss and the. So valuation, high
They're growing
valuations.
quite rapidly,
Yeah,
right? The full year growth, they're at sort of nearly 78% compound growth
yeah.
on installs, which is the recurring revenue. So this to me is one of those, and sure, it might go down, and it might go down to 20%, 20p. There's some resistance there, but if you're looking, we've got a bit of a deep digging on this one, and I think they had something like 84. Well, I know 84,000 registered users at the 30th of September. Well, all the announcements that they've made and the sort of, let's say, organic growth might take that up to 115,000 by March. So you've got a growth of another 36% half year. I think the traction's growing now. They've got a couple of contracts with the US. They've got a couple of contracts in the
Yeah,
UK
yeah.
that started
No,
bringing it.
David, you honestly, you could be right. And to me, that if they came down a little bit, and I don't think so, they will come down too much now. They may come in a band. Maybe if it comes down here at 17, maybe I'd have a look. But I just think now that it's a lot priced in, and I'm not convinced by the valuation of it. That's all. And I said what I'm looking at when I look at forecasts sometimes. I want to see a nice profitable figure here, and they're doing 11.6 million apparently in 2026, and doing 400 grand of EBITDA. So they haven't even put the profit before tax in, but that's going to be a loss. So when will they start generating cash? Because they're going to have to raise, aren't they? Again, I assume. So I don't want to be, I don't want to be anywhere near a company. Let's be honest. We should be on the bear market by then, so it shouldn't be a problem. They should be raising quite easily if they're growing very quickly. It shouldn't be a problem. But I don't want to be in a situation these days where a company has to keep raising it all the time, or has to. It's just not. You may be right. They may blow. There's a lot of hype there, and like so, there's good top line.
I understand. I understand the raise issue, and it's a risk. If they were raising in distress, which a lot of companies are doing at the moment, I would understand, and I could say, you know what, stay away. But when you raise, and you know this with Couth, right? When you raise in a position of strength, it's a different matter.
Yeah, this is a different story.
If they show some growth, they might raise. It's just the counter argument, right?
Yeah. I know. No, I listen. I think it could do it. All I'm saying is, it's not for me. I may be wrong. I'm happy to be wrong on the basis of how I invest, and I'm that's fine. Because when I say look at companies that have growth and value, I'm not saying that's the only companies that will rise. There are other companies that will rise and the share price goes crazy, and I don't understand why it's risen. So I just think, okay, but generally, as far as the risk reward profile is concerned, you're better off going for growth and value, and then obviously having a company that doesn't need cash. So they are known for risks, and if you can avoid known risks, and that whittles your pool of stocks down, which is a good thing. And then you get eventually to companies that have growth value, they're generating profit, and you're thinking there's not a lot wrong with them. What can go wrong? But so just what I'm saying is just weighing up risk and reward. And I'm not saying this won't go bananas. It has done. It may go bananas again because they chin up these contracts and they seem to have big numbers in them. But when you actually look under the bonnet, you think,
I agree. I think there's so from my perspective, what you said about
are you in here? Have you taken the position?
Then this is the point. Yes, I took a starter position out because I think, as you've said, my core holdings are everything you've said: growth, value, momentum, blah blah. They're my core holdings. But we're all, we're in the small cap world. We all want that big win. So a little small position in something like this, or something that looks solid and has exponential growth.
Yeah.
Just weight the portfolio accordingly, right?
Yeah. Exactly. No, you need it's almost this is a hope high potential stock. It is sort of like that a little bit, even though it's generating revenue now.
I disagree with that statement because it's generating orders. It's signing big customers. It's not hope high. It's at the start of commercialization.
Yes, but you're not basing that on. It depends how you quantify that, of course. But I mean, it's not going to be. The revenue is great. It's probably not. But what I'm saying is, it's got the news is quite good. I mean, in fact, it will power the hope and the hype. So it's not pre-revenue. It's not loss making. In fact, I've just invested now on a company that's a hope high potential stock, and I again, you could make the same argument there as you have for this, and I could probably say, okay, yeah, you're right. So, but it is a hope high potential stock. So, no, you could be right here. You actually could be right. It's just for me, I when I see a stock rise and I do a 5 bagger like that, right? I genuinely think I missed out on the big rise, and so literally, I think what I'm after is another company like that down here.
Well, you mentioned you mentioned Boohoo and you mentioned Assos. They both did it. Then they kept going.
Yeah. Oh, absolutely.
There's a small micro view.
No, you're right. You're right, and it could do well. It's just if it comes down, and in fact, it's look at that on the 200-day moving average. It needs a rally here. Yeah, but we'll see. It'd be good if it broke that 30%, so it'd rally again. But yeah. No, listen. I just liked it. It's one of those times where it got away from me, and I thought once that happens, and it does a 5 bagger pretty much, ready to go. Went from 6 to 30 odd pence. I thought, no, I've missed that. So this kind of, if you look at the classic, hype cycle, it does that, comes back down, and then it commercializes slowly, and the rise tends to be slow, which is not a bad rise because it's sustainable. So you won't see maybe that breakneck rise, but it could be a nice, steady rise. But I keep an eye on it. I don't always look at the news on Ondo. I do quite look at. I quite like the what they're doing. But I'll see. No, I like it. And if you take the position, I definitely keep updating on the thing. But risk-free investments. Just remember, if you can get risk-free investment, ideal. Now I've got risk-free investments on time, Beaks, Synetics. That means I can't lose essentially. I put a stop loss in just above my buy, unless the big gaps down. But it's a high probability I'll never lose money on those stocks. And that's, if you want to try and get in that position, 20% up, that's where you want to be. Profit only investment is silver bullet. I can only make a profit on that. And of course, if these start to go up, Beaks and Synex, I do think they'll start to go up and they'll bow around and they'll come back up again. Then I will average up on those as well. I'm very cognizant of Destiny Pharma. Did very well. And the reason why I did well is because it got a bit of hope hype around it. It's not a deal, but they had cash as well. And, I said, I need one hope hype potential stock in the portfolio. And when you buy a loss-making stock, which that is, 2 questions you have to ask. I'm going to keep repeating these, okay? So they get into your head. I mind. 2 questions you ask. How much money do they have? How long will it last? So in February, they did a placing and a retail investment sort of subscription. They raised 6.22 or together 6.5 at 9 pence. Okay, they said before this fundraise happened, they had cash for this, and that would last to January 2025. So they had they're going to up to spend a bit now because they've got a bit more cash. But I'm assuming it goes beyond January 2025. This is built full effects of any additional fundraising. Okay, so got a nice, decent cash runway. The broker, I can never really work out the potential here. Broker total target of 30 pence. That's 150% up with 12 pence at the moment. I do like this. Look at that bowl. Look at that. So several times it's trying to break this 200-day moving average, come back down. But now you've got some higher lows here, a breakup here, and the golden cross pretty much happening. So I quite like this. It's literally closed above all previous highs in the last, since November. And they've got cash. So I'm just hoping that literally, I put a stop loss in, I think 20% down. I think it's at 9.4 or something. So if it breaks down here, I know something's gone wrong. But like 1%, it's not a lot. But it's the kind of company I think could get some, decent upside. Bit of high potential. The cash is not a worry. The story is now the story. So Verici, I bought a little bit, not a lot. Literally, I was just before I did the interview, before market closed.